Be honest. How many times have you entered a trade feeling sure about your prediction, only for the market to move against you just a few minutes later? Many traders constantly encounter the same issue. Their predictions are inaccurate, and their stop losses are frequently triggered by the big players in the market. Perhaps you spot a chart pattern or a price movement, but you don't really understand what's driving this movement, why it's happening, or how long it might last. Most beginners tend to trade by relying solely on price and standard indicators. Furthermore, many trading strategies that depend only on price analysis or indicators based on price make small traders easy targets for market manipulation. But what if I told you there's a way to see what most people can't? A way to uncover the market's true intentions and shield yourself from manipulation by the major players? That's precisely what volume analysis is for. A new level of market insight that will give you an edge. According to statistics, trading using a standard candlestick chart has a success rate of just over 50%, not much better than Schrodinger's cat. However, a footprint chart with volume data that counts for almost 70% of your success. Volume analysis is a form of technical analysis that focuses on the relationship between price and trading volumes. If you consider the fundamental law of supply and demand, price movement is simply the outcome of decisions made by market participants, and volume represents the ongoing battle between buyers and sellers in real time. The price of any asset depends entirely on who is more active, buyers or sellers. Sounds good, doesn't it? But is that enough to avoid manipulation by major players? The answer is yes. With basic volume analysis tools, it is indeed possible. Use the order book to effectively track large limit orders and confirm price levels with actual real orders. Analyzing pending orders in the Smart DM and liquidity dynamics helps you determine where major players are bluffing and where they are serious. Pay attention to the volume profile to identify key levels for market participants where a reaction and significant interest are guaranteed. Open the footprint chart to look inside traditional candlesticks and examine the history of the battle between buyers and sellers in the greatest possible detail, right down to each individual trade. See, each candlestick is no longer a mystery to you, but an open book where you can observe who bought or sold, when, and how much. The shift in initiative between buyers and sellers is right there, clearly visible. So, what can you do with volume analysis? How can it help protect your deposit? Let's start with the basics and assess how strong the trend is, the one you might be tempted to trust. Take a look at this impressive beginning of an uptrend. It looks as though it's gathering momentum and effortlessly driving the price to a new level, doesn't it? But have a look at the volume profile on the left. The VAH level could very well act as resistance. What do you think will happen next? A new red candle appears, almost identical to the green one. Perhaps it's just a feeble attempt at resistance? But take a look at the candle's volume and the actual imbalances on the seller's side. They're significant, and they won't allow the uptrend to continue. At this stage, you could already start looking for a trigger to enter on the reversal, and as you can see, despite the buyer's attempt to hold their ground, the volumes and imbalances quickly exposed the strength of the sellers. That would have been a successful short position. However, if you had noticed weak resistance and lower volumes, we could have confirmed the strength of the trend and anticipated a breakout above the VAH, the upper boundary of the value area. In both scenarios, you'll be on the right side and protect your capital. But let's return to the pressing issue, false breakouts. There are hardly any traders who haven't been stopped out by them. Here's the moment when that very VAH is broken. Just look at how the price fluctuates at this level. It looks as though a small candle has already closed above the level, and it's only natural to hope for an upward movement. But take a closer look. What does a volume of 15,000 mean for such a liquid market as Bitcoin? It's simply a sign of weak buyers and a signal to think twice. And here it is, the trap for inexperienced retail traders. This green candle is an artificial impulse, rising so high and luring in the retailers. But the candle leaves a long wick with volume imbalances and closes lower, suggesting the impulse is fading. And if you didn't wait for a new candle to form above the VAH level and rushed into a trade, sellers are already pushing the price down, triggering stop losses. As you can see, volume analysis is a powerful tool that helps traders and investors improve their trading results. While other traders are just guessing, looking only at the price, you see the full picture of the market and draw your own conclusions. All you need is to deepen your existing knowledge and get software for volume analysis. Don't wait until Monday. Just download ADAS from the description and practice reading footprint charts for free, taking your time to explore all its features. And on our YouTube channel, you'll find not only basic courses, but also advanced trading strategies.